Going on, everybody? Back at it again. Back at it again with another episode of the Trade for Yourself podcast. If you can believe it, this is episode 50 of the Trade for Yourself podcast. Episode 50. This is going to be the last episode of the year. Before we even get started, let me thank everybody that has been tapping in for the entire year. Listen to me speak, listening to my ideas, me trying to lay things out and provide things, put things into context. I really truly appreciate everybody and everybody continuing to come back every single week and listening to the Trade for Yourself podcast. And it's very, very fitting that episode 50 is coming on the last Wednesday of the year. This is very, very good, very, very solid. Again, I really, truly appreciate you all for tapping in with the Trade for Yourself podcast, because this is a big deal. And I really pride myself on adding value and helping you all learn about the stock market. So let's go ahead and get into everything. I don't want to waste any more time. Again, welcome back to another episode of the Trade for Yourself podcast, where my mission here is very, very simple. I just want to help you learn how to trade and invest in the stock market for yourself. So make sure that you please like this, okay? Please like this. Please subscribe, okay? Make sure you hit the notification bell. That way you can have access to all of my content that comes out instantly. Okay, I want you to have access to it instantly so you can get that information, get the knowledge that you need in order for you to become successful in this market. Now, as I said before, this is episode 50 of the Trade for Yourself podcast, and it's very, very fitting. It's very, very fitting for us to talk about this particular subject. What's wrong with Tesla stock? Okay, Tesla stock has been in the news a lot. Okay, it's been in the news a lot. And on this podcast, I've also talked about Tesla stock a lot as well. Now, this podcast is going to be pretty much not deciphering, is Tesla a good company? Because I believe that Tesla is a good company. And, we've talked about that. It's about establishing what price is Tesla a good investment at? Where is it trading at? And also just putting into perspective, what issues is the company dealing with right now? What issues is the company dealing with right now? Are these temporary issues? And what can the company do to continue to get better over time? So this is really just going to be a breakdown of establishing what's going on with Tesla stock. What are the issues? Are they temporary? Okay. Do we believe it's a good company? If we believe it's a good company, then let's just establish a price for it, establish what we believe it should be. So let me go ahead and share my screen, because I want to go over this CNBC article, because I believe this CNBC article lays it out best. The CNBC article lays it out best for what we need to pay attention to in terms of Tesla stock right now and what's really hampering the stock. Now, Tesla stock is headed for its worst month, quarter, and year on record. Okay. Tesla's sell-off intensified on Tuesday, with the stock closing down 11%. Elon Musk electric car company is days away from closing out its worst month, quarter, and year on record, and it has moved past Meta to become the worst performing stock in 2022 among the most valuable tech companies. The latest drop comes after Wall Street Journal reported that Tesla will continue a week-long production halt at its Shanghai facility, facing a fresh onslaught of COVID cases within its Chinese workforce. Reuters reported that when Tesla's Shanghai plant reopens in January, it will do so for just 17 days, in a break from Tesla's established practices. Shanghai has been battered by a fresh wave of COVID infections this month. Tesla shares have fallen 73% from their record high in November 2021. The stock is down 69% in 2022, more than double the decline in the NASDAQ. Among major car makers, Ford is down 46%, and General Motors has fallen 43%. Since its IPO in 2010, Tesla has only fallen in one other year, an 11% drop in 2016. Twitter is bleeding cash, and Musk is selling Tesla stock in big chunks. According to filings in mid-December, Musk sold about 22 million more shares of Tesla, which were worth about $3.6 billion. Earlier this year, Musk told his millions of followers on social media that he had no further Tesla sales planned after April 28th. After his latest stock sale, Musk said on Twitter Spaces on December 22nd that he would not be selling any stock for 18 to 24 months. In a debate with a Tesla shareholder, Musk pinned Tesla's declining share price on Federal Reserve rate hikes, tweeting that people will increasingly move their money out of stocks into cash, thus causing stocks to drop. His words have done little to placate investors. Trading volume crossed 201 million shares on Tuesday, the second highest mark for the year, according to FactSet, behind December 2022, but behind December 22nd. Tesla's top 5 trading days by volume have all been since December 13th. For the month of December, Tesla has plunged 44%, by far its worst month ever, as it has never fallen more than 25% in a single month. And in the fourth quarter, the stock is down 59%, worse than its 38% drop in the second quarter of this year, which had been its worst period on record. Last week, Tesla expanded discounts in North America for buyers of Model 3 and Model Y electric vehicles. Those discounts came after the automaker offered incentives in mainland China for December auto sales earlier this month. Pressure is also mounting in the used car market, with the average price for a used Tesla dropping 17% from July highs, and with used Teslas lingering longer than other makes before being resold. Meanwhile, at Twitter, Musk has continued to flirt with controversy, welcoming back previously banned users, enabling the continued releases of internal messages related to the company's past handling of COVID and election-related content, and flip-flopping on policy changes. Companies have paused or suspended paid advertising on the platform, prompting outbursts from Musk. Wedbush Securities' Dan Ives wrote in a report on Tuesday that Musk's leadership issues pose potentially deeper problems for the automaker. At the same time that Tesla is cutting prices and inventory is starting to build globally in a face of a likely global recession, Musk is viewed as asleep at the wheel from a leadership perspective, wrote Ives, who maintained his buy recommendation on the stock. Now, Dan Ives is an analyst that I respect a lot. I really, truly respect his work. I respect his research, and I listen to the things that he says because I know that him and his team have been doing the adequate research. Now, Tesla investors want Musk to refocus his efforts on stabilizing the company that accounts for the vast majority of his wealth. Because of the extended sell-off, Musk ceded his title as the world's richest person earlier this year to LVMH chair and CEO Bernard Arnault, according to Forbes. I think he really needs to focus on operations, focus on giving us great cars, said Craig Irwin, an analyst at Roth Capital, who has a hold rating on the stock and an $85 price target. Tesla closed on Tuesday at $109.10. The shares were set for greater losses on Wednesday, with Tesla falling more than 3.5% in U.S. pre-market trading. Now, Tesla did end the day today up a percentage. I don't know the exact percentage, but we will look at that once we go to charts. But that's pretty much what the article is saying. Now, this is what I want to put into perspective, just me personally, right? Me personally. The issues with Tesla are real issues, but I would argue that they are only temporary issues. These issues that we're talking about right now are temporary issues that don't affect the fundamental value of the company. It's a lot of noise, in my opinion, that has been going on. So let's go through every single issue that I see in this article, and let's put it into perspective and let's talk about it. Now, the latest drop comes after the Wall Street Journal reported that Tesla will continue a week-long production halt at its Shanghai facility, facing a fresh onslaught of COVID cases within its Chinese workforce. Okay. Reuters also reported that when Tesla's Shanghai plant reopens in January, it will do so for just 17 days in a break from Tesla's established practices. Shanghai has been battered by a fresh wave of COVID infections this month. Now, a week-long production halt at its Shanghai factory is a temporary issue. It's a very, very temporary issue. And the COVID situation that is going through in China, I also feel like that is also temporary. Why? Because I feel like eventually, over the next 12 to 18 months, I feel that China is going to relinquish its zero COVID policy and get back to normal. I really truly feel that because the economy has not been doing very, very well in China. So they are going to relinquish the zero COVID policy and eventually is going to go away. And the demand issues and the week, I put like this, the week-long production halt that the company is going through at its Shanghai factory is only a temporary issue. Okay, let's say, for example, that Tesla was able to diversify its portfolio in terms of manufacturing facilities, right? Shanghai is a major manufacturing facility, but it also just rolled on Austin, Texas. It also just rolled on Berlin, Germany. Okay. It also has a Fremont, California factory that produces vehicles. Okay. What if if global demand continued to increase in the way that we believe it is over a long-term period? What if Tesla was able to open up another factory in the United States? What if they were able to open up another factory, in Mexico or any other country, right? The demand and the production that the company has going on right now is not an indication of what will happen in the future. So I don't want us to pay attention so much to all of these articles that just come out every single day about what's going on with the company right now. Let's talk about, okay, yes, we understand this. We can discount this, and this may affect what we will pay for the stock right now. But what if this is all noise and this is just providing us an opportunity, right? Second thing, okay, Tesla shares have fallen significantly. Okay, Tesla shares have fallen 73% from its record high. The stock is down 69% in 2022, more than double the decline in the NASDAQ. And among major car makers, Ford is down 46% and General Motors has fallen 43%. Now, Tesla has fallen a lot in relation to the NASDAQ, relation to the index, right? And the stock is broken. There is no secret that the stock is broken. But this is the thing. They said that the company's stock price is down more than other car makers. I just feel that it's not very fair for us to compare Tesla to Ford or compare Tesla to General Motors. Yes, they all make cars, right? Yes, they all make cars. They all produce cars. But Tesla is fundamentally a technology company, not a car company, unlike Ford, unlike General Motors. Like the value in Tesla over the long-term period is in the autonomy. It's in the autonomous technology, okay? It's in robotics, right? It's in the demand for innovation that is going to come over the long-term time span, right? If we look at the competitors in the industry, Tesla is leapfrogging every other car maker in this industry from a manufacturing perspective of electric vehicles, from a technology perspective in terms of electric vehicles. Ford and General Motors do not have the level of capacity. They don't have the technology that Tesla has in order to be able to do the same thing that Tesla does in their vehicles. So me personally, I feel like it's unfair for us to compare Tesla to a General Motors, to a Ford, because they're really not in the same class. Like they're just not. So that is, again, a temporary issue. I bet you eventually Tesla's going to start outperforming Ford and General Motors and other makers of that nature. Okay, Elon Musk. Okay, Twitter is bleeding cash and Musk is selling stock in big chunks. According to filings in mid-December, Musk sold about 22 million more shares of Tesla, which were worth about $3.6 billion. Earlier this year, Musk told millions of followers on social media that he had no further Tesla shares planned after April 28th. Now, Elon Musk is selling stock to fund his Twitter purchase. Okay. I don't think that is that big of a secret. But just looking at it on the surface, we say, oh, Elon Musk, he's selling stock. Like, it must be a problem. Like, the value of Tesla is just going down. But let's really truly put what he just sold into perspective. This, according to the filing that we see in mid-December, let's put this particular sale of stock in perspective, okay? Elon Musk sold 21,995,000 shares of Tesla stock at a market value of $3.6 billion, right? He sold 21.9 million shares of Tesla, almost 22 million, like the article says. But he still currently owns 423,622,432 shares. Okay. He owns over 420 million shares at a market value of $47,746,484,310.72. Okay. So he still owns $47 billion worth of Tesla stock. And the most recent sale of Tesla stock was only 5.1% of his total holdings. So he didn't even sell 10% of the amount of shares that he had in Tesla stock. Like, understand, Elon Musk has been holding this stock since IPO, before IPO. So yes, like, he's selling stock because he wants to fund this Twitter purchase, but not only is he just selling stock for that, but at the same time, you can look at it like he's selling stock just to take profit. Like, think about the cost basis. Think about how much he is probably up from a return perspective on these shares, right? What he sold in the grand scheme of things is just not that big of a deal. The sale that he made does not make me does not make me nervous as an investor seeing management sell stock. Management sells stock all the time. If he was selling 25% of his holdings, or if he was selling 50% of his holdings, or worse, 75% of his holdings, then that will be more of an issue and more of a problem that we may want to talk about. The fact is that this sale that he made was only 5.1% of his holdings, and he still owns 423 million shares. That's still a whole lot of Tesla stock, okay? Whole lot of Tesla stock. Now, last week, Tesla expanded discounts in North America on their vehicles, right? They expanded discounts in North America for buyers of Model 3 and Model Y electric vehicles. Those discounts came after the automaker offered incentives in mainland China for December auto sales earlier this year. Also, pressure is mounting in the used car market, with the average price of a used Tesla dropping 17% from July highs, and with used Teslas lingering longer than other makes before being sold. So, demand. So pretty much Tesla's expanding discounts, which could, lower revenue, lower profits, okay, temporarily. And the average price dropped 17% from July highs, okay. We're expecting to go into a recessionary environment, okay. Demand is naturally going to slow in a recessionary environment. Also, higher interest rates will also slow down demand as well. The used car market has came down in general anyway. due to the high interest rate increases that the Federal Reserve did. So the fact that the average price of a Tesla is dropping 17% from where it was in July, and we're in December right now, it doesn't move me. It doesn't make a difference to me. It's all temporary. We're going through cycles. We're going through the environment. Like, think about this. What is the EV demand going to be 3 years from now? What is the EV demand going to be 5 years from now, or 10 years from now, when the other car makers like Ford and GM, when they say that they will be done making internal combustion engines? What is the EV demand going to be like at that time? And who is going to be in better position to be able to profit from it the most, right? Profit from it the most, right? Think about this perspective, right? Let's compare Google and Apple, right? Let's compare Google and Apple, right? Google owns Android. There are more Android phones being sold worldwide than iOS, than Apple phones, right? There are more Google phones, more Android phones being sold worldwide than Apple phones. But Apple makes more profit and generates more revenue from the sales of their phones than Google does, even though they don't sell as much. Apple has the superior profit margins, but Google sells more phones, right? Apple is still a quality company. We don't say that Apple is a quality company, or we don't say that Apple is dealing with too much competition in the smartphone market. Why is that? Because they have the best margins in the industry. They have the best margins. So that's not even an argument. A lot of times what we say about Tesla is that Tesla is going to have a large percentage. It's pretty much going to have large competition in the EV market, right? That's what we say. We say that Tesla is going to have a large competition in the EV market. But this is going to be the difference between Tesla and every other company that takes away market share from them. You may be able to take the market share away from them, but you're not going to have the better profit margins. You're not going to do that. You're not going to have the better profit margins. You're not going to have the better product. You're not going to have the better technology, right? There's not a company that I know of right now that has better technology for their cars and for the potential semi truck and for the potential cyber truck than Tesla has. I don't know of one. Please let me know in the comments right now. Let me know if there is a company that has better technology and a better electric vehicle product than Tesla. Please let me know. In my opinion, and as far as I'm concerned, it doesn't exist. So when we're talking about demand, guys, and we're making investments, like investments into a stock over a long-term time span, I'm not worried about quarterly demand in China or quarterly demand or what's going on in the used car market. It's a non-factor for me. Okay. Meanwhile, at Twitter, Musk has continued to flirt with controversy, welcoming back previously banned users, enabling continued releases of internal messages related to the company's past handling of COVID and election-related content, and flip-flopping on policy changes. Companies have paused or suspended paid advertising on the platform, prompting outbursts from Musk. Now, he is now pretty much, a lot of people, they are saying that, Elon becoming the CEO of Twitter has become a major distraction, and people want him to focus on making Tesla better. Like they say right here, Tesla investors want Musk to refocus his efforts on stabilizing the company, right? Like they want him to focus on operations and focus on giving us great cars, right? Now, me personally, I agree with people, and I agree with the consensus that I do want him to focus on Tesla, right? I do want him to focus on Tesla, and I do want him to kind of, chill out on Twitter, because I do believe that all the Twitter stuff is noise. But at the end of the day, he's going to find a new CEO of Twitter at the end of the day. Like he's going to do that. He's not just going to be putting in all this level of work that he is doing all the time. Now, also think about this, like put it into your perspective, right? Elon Musk had to pay $44 billion for that company, right? If you paid $44 billion for a company, would you pay attention to it? Right? If you could pay $44 billion for a company, that means that you probably have a lot. That means you probably have a large net worth, and you probably have a lot of things going on. You may have a lot of things going on, but you're still going to pay attention to the fact that you made a $44 billion investment in this company, right? And trust me, I get it. I understand that as a Tesla investor, you want Elon to focus on what's going on. But number one, I just feel like this Twitter fiasco and everything that's going on is just noise. Number two, think about this. Elon Musk was a founder of PayPal, and he took all the money that he made from that investment and he placed it into Tesla. A lot of times when we think about investments and we think about companies, we just need to sit down, stop, and think, okay? Elon Musk is not going to allow Tesla to fail. He wants Tesla to be successful. He wants that. He put all his money into investing into Tesla that he made from PayPal. Elon Musk is all money in, y'all. He's all money in. He wants Tesla to be successful. Tesla is his baby. He's going to make sure of it that the company is successful. So I'm not really worried about what is going on right now with Twitter. Like, it's really truly a non-factor at the end of the day. And so we look at all of the news and we look at all this negativity and everything that has been going on, right? I talked about Tesla stock before. I've talked about it before on the podcast, and I've talked about so much that the company has going on. I've talked about so much that the company has going on, its growth potential, and what the company has going on, things of that nature, right? So with everything that's been going on with Tesla, the decline in value, all that type of stuff, this is the question that I want us to sit down and I want us to answer. Okay. Do we believe that the company is good? Right? Do we believe that Tesla is a good company? Okay. What would make us believe that Tesla is a good company? I have some things that I cling to that lets me know the characteristics of a good company, right? Is the company expected to have growing revenue and growing profit? Okay, year over year. Is that expected to increase year over year? Is the company a leader in its industry, right? And does the company have a competitive advantage over other people in the industry, other companies in the industry? Does it have an advantage, right? Does it have good products? Does it have good services? Are they expected to grow their product lineup? Are they expected to make the products better? Are they expected to add on services that is a part of management's vision that just hasn't came on yet, right? Does the company have a good balance sheet? Does it have strong current assets over current liabilities? Does it have a good cash position? Does it have good operating cash flow? Does it have good free cash flow for investment, for continued growth in the business, right? Does the company have low debt? Is it in danger of going into debt? Does the cash position cover the debt? Does the operating cash flow, the free cash flow, all those metrics put together, does it cover the debt, right? And if the company does have debt, does it have a good defined plan on how it's going to pay down and reduce that debt, right? All those things are the things I look at when I think of it. And also one last thing, management. Do you believe in management? Do you believe that management is competent in the industry? Do you believe in the vision that management has for the company, right? Does the company have good talent? Does it have good engineers? Does it have good, whatever industry it's in, does it have good talent in the fold, right? All those things are things that I look at when I say, hey, is this a good company, right? So me personally, I believe that Tesla is a good company because I believe that Tesla has all of those things going for it, right? Over a long-term time span. So take this example. So we've already established, just for the sake of this argument, that Tesla is a good company. So once an investment club, let's say an investment club comes together and they're talking about investing into companies, right? Once an investment club reaches a consensus that a company is good, the discussion is then going to shift. It's going to shift. How is it going to shift? It's going to shift. The question isn't going to shift. The question is going to shift from, is this a good company? And if it's a good company, what should we pay for it? It's going to be about, what are you going to pay for it, right? We've already established if it's good. An investment club is not going to keep talking week after week, month after month, year after year on whether a company is good. They're going to establish that early and often. Then they're going to change and shift and to say, you know what? We understand that the company is good, but members of the investment club are then going to be debating with each other about what we should pay for in order for this to be a good investment. Because in order for it to be a good investment, we have to get a good price for it. That way we can generate a maximum amount of returns, right? And the people in the investment club, they probably all have different ideas about how to value a company. They will all value the company in the way that they see fit. And then the investment club will come to a consensus on a price that they want to pay for the particular stock, prices that they will continue to enter in, things of that nature, and how they're going to build positions in that company, right? I feel that Tesla is a good company, and we don't really have to debate that at this point, unless something fundamentally causes the business to change, right? Unless something fundamentally causes the business to change, we don't need to have a discussion on whether Tesla is a good company. Now we need to shift our focus on, what are we going to pay for it? And so now I want to bring up the chart to talk about what we should pay for it, right? What are we going to pay for it? That's really truly, what is important. What are you going to pay for it? Because we've already established it's good, but now let's talk a little bit about, what we should pay for it. So first of all, technically, let's look at it, right? The stock is broken, right? It's broken. And this is a monthly chart. Okay. This is a monthly chart, right? The stock kind of, to me, it kind of has a head and shoulders pattern, and a head and shoulders pattern is a bearish pattern. We've got a head right here at 1450. We've got a shoulder right here around 300, and we got another shoulder right here around 300, right? So we got the head and we got the shoulders, right? So head and shoulders patterns, we have the shoulder, we have the head, make this with the shoulder, and then we break down, right? So the stock is broken. It's no debate. Like this, the stock isn't working. Like it's in a defined downtrend, right? And we're hitting levels, that we haven't hit in a long time. But now, whenever I'm looking at stocks over a long-term time span, I always have to look at the Fibonacci retracement levels. I always have to look at the Fibonacci retracement levels, because the Fibonacci retracement levels give me potential support levels over a long-term time span. We always draw them like from a long-term time span. We always draw them from the 52-week high all the way down to a major low. And I'm choosing my major low as the COVID low, the low that the stock had during COVID-19, like the depths of the COVID-19 pandemic in March 2020. Now, as I said before, the stock is broken. Specifically, we look here and we see we have came below this 23.6% Fibonacci retracement level, right? But this is a key level. This is a key level that we have marked off, and we're right around this level. So, if the stock continues to break below this level, that again just reinforces the downtrend. It reinforces that the stock is broken and that the stock is just not working in this environment. And so I keep repeating myself. I keep saying, is the stock broken? And this is the thing too, is the stock broken? Right. But I want to ask this question. Is Tesla just a broken stock, or is it also a broken company? Right? A broken company means there's something wrong with the fundamentals and it's no longer good. But if it's just a broken stock, that means something temporarily could be happening in the environment that could be causing the stock price to fall. My argument is that Tesla is a broken stock, not a broken company. And so with that being said, I believe that now we should ask ourselves, what should we pay for it? What should we pay for Tesla stock? And so now I want to bring up some potential valuations, right? Some potential valuations in terms of what we may believe the stock is worth, like estimates for what the stock could possibly be worth. Now, at the top right here, I have fair value. Okay, what is fair value? I have fair value forward 2023 PE at $181.97. So how did I come to that metric, right? So I use Zacks Investment Research, and Zacks Investment Research has a PDF that shows how we pretty much value stocks, right? And so the PE ratio that I use, this is pretty much a PE ratio, the price to earnings multiple, pretty much telling us, okay, what am I willing to pay for $1 of the company's stock, right? So what I did was I took the forward PE ratio projected for next year, and I multiplied it times next year's earnings, and that gave me a fair value price, a potential fair price for what the stock is worth. Now, in full disclosure, that fair value price that I have, it might not actually be exactly what the stock is worth for a multitude of different reasons. Number one, a stock is not going to trade exactly what it's worth, right? It's not going to trade for exactly what it's worth because certain things can move price at any given time. A stock could be extremely overvalued, right? Or a stock could be extremely undervalued. I believe that that we are in a scenario that right now a stock is extremely undervalued, right? Also, the P ratio is pretty much an estimate of what many analysts come together on a consensus on what they believe Tesla earnings will be, right? So Tesla may not earn enough to be able to be worth almost $182 a share. But that's why you would discount the fair value, because if you believe that Tesla stock is worth $181.97, you would want to pay underneath that. You would want to pay underneath that because that allows you to get the best returns. The more discounted you can get a stock underneath its estimated fair value, the greater the likelihood that you are going to have a greater investment. And so I have different levels discounted here. I have a 10% discount to fair value. I have a 20% discount to fair value, which is about $145.58. I've got a 30% discount to fair value, $127.38. And I have a 40% discount to fair value at $109.18. And I have a 50% discount to fair value. Now, today, the stock came down, had another 52-week low again. It hit another 52-week low. It didn't close at another 52-week low, but it came down to $108.24, which is right around a 40% discount to fair value. Now we got we pretty much got some buyers at that 108 level, and we came up a little bit. Now we're probably going to have more downside to the stock, and it's a possibility that we could come down to a 50% discount in fair value. And this is the thing, and you really got to ask yourself this question: am I willing to buy a stock 40% off or 50% off, or just like we're getting this stock extremely undervalued. And pretty much that's pretty much the biggest point that I'm trying to make. The biggest point that I'm trying to make to us right now is that we are getting Tesla stock extremely undervalued, regardless of what metric you wanna show us. Like, is trading on the cheapest valuation that it's ever had in the history of the company, with the best fundamentals that it's ever had for a company, right? Like, that's just what we're looking at. And so we've got these fair value metrics lined up, right? And we have all of them. We have all the fair value metrics lined up. So let's look at some key support levels to the downside. What are some key support levels to the downside that I want to look at? And so I'm going to change from a monthly chart, and I'm going to move over here to a weekly chart. Now, we've got some key levels that we've hit. We've got some key levels that we've hit, but we've not closed below them yet. We've got a key support level in September of 2020 at 109.96. That is a level that I believe that we should watch. We should mark that level as a potential level. We've got $91 as another potential level that I see some pretty good support at from June to August, right? There's some pretty good support that we have at that $91 level, right? There's also a small gap in price between about $85 to $80.58. That's the gap to the downside that could potentially close if we get below this $91 level. And I've got a demand zone marked in yellow starting at about $66.66, which is a very, very important level, because that $66.66 price is almost in line with the pre-COVID high, like the pre-COVID high that the stock price had. So we've got some key levels to the downside, right? Some key levels to the downside, and the stock has already fallen so much. And so my argument is, okay, if you believe that the stock is good and the stock is discounted so much, why not you pick up some shares right here with the stock being 40% below fair value, right? The stock is 40% below fair value right now, right? Okay, 50%. Okay, so 50% below fair value would be $90.99, which is right in line with the $91 support level that we have on the stock. These levels, I believe that like the valuation in the stock prices, like I believe they kind of have to be connected in a way. I'm not saying that they are exactly, parallel all the time, like forever, but I do feel that you have to look at that you have to marry the technicals and the fundamentals together in order to get the full picture. I don't think you should look only at fundamentals. I don't think you should look only at technicals. I think you should look at both of them and marry the picture together. And so my argument is, let's say you haven't started a position at all. Let's say you have not started a position in Tesla, but you believe in this company. You believe in the growth strategy. You believe what's going on. I want to tell you that there is a certain probability associated with if this stock is going to come down to $91, if it's going to come down to $80.58, if it's going to come down to $66.66, right? There's certain probabilities associated with that. We don't know exactly if or when the stock is going to come down to these levels. It's a probability, it's a possibility, but I would argue that you're better off building positions when stocks are on the way down, right? You are better off building positions on stocks when they're already on the way down and they are discounted, right? And they are at a discount to they're at a discount to fair value, right? Fair value for the stock. That's where I feel like you should start buying stocks at. You should start buying stocks when you have discounted them to a certain percentage, right? Pretty much giving you a margin of safety, okay, discounting them to the fair value and then start buying stocks at certain levels and building positions on the way down, right? Building position on the way down, that would help you build a position because people buy stocks in different groups, right? Sometimes somebody can only buy one share at a time. Sometimes you can only buy half a share at a time. Sometimes you can only buy 10 shares at a time, 25 shares at a time. Sometimes you can buy 100 to 1,000 or 10,000 shares at a time. Like, it's different for everybody. It's different for everybody in terms of what you can buy. But let's say, for example, let's say you had a goal to get 25 shares, right? No, 100 shares. Let's say you had a goal to get to 100 shares, right? And hypothetically speaking, Tesla hit all these prices and bottomed out right here at $66.66. What if you bought 25 shares at $109.96, 25 shares at $91, 25 shares at $80.58, and 25 shares at $66.66, right? Your average price would then be $87.05 if you bought at those particular levels. I would argue if you are making a long-term investment in Tesla stock, $87.05 as an average price is an outstanding average price. That's an outstanding average price, because if you be strategic enough and you make a good investment, especially when it's discounted to its fair value, I would argue that if you can buy enough of the shares when it's on the way down and you're building that position and you're accumulating, you'll never have to buy more Tesla stock again. Like, you'll never have to buy more Tesla stock again if you be strategic and get it in the right way. Now, we see this high watermark, this high stock price of $414.50, right? I'm not here to predict anything. But I believe that it is a great possibility that Tesla will come back and reach this stock price and exceed it at some time in the future. I don't know when that will be, but I believe that Tesla will come back to this particular valuation, like the particular valuation that Tesla was trading at this specific time. I believe that Tesla will come back to this valuation and exceed that valuation at some point in the future, right? I believe that, but I also believe that is a long time in the future, 5 years out, 10 years out, even maybe it could even be 10 years out. But like I said before, these average prices right here, if you bought at every single one of these prices, let me expand a little bit so you can see. If you bought the same amount of shares at every single one of these prices, like I said, your average price will be $87.05. $87.05. Put that into perspective. What would your average return? What would your return be if you bought at $87.05 and we got back to that valuation? If we got back to that valuation, your average return would be over 376% in terms of an average return. That's why when you can buy quality stocks in a bear market, when it's significantly discounted, right, to its own fair value, and also in relation to the index, like the NASDAQ or the S&P or the Dow Jones or the Russell 2000, that's why it's better to purchase singular stocks when you're in a bear market, because that can give you a great opportunity for long-term investment returns. Now, again, I appreciate y'all again for tapping into another episode of the Trade for Yourself podcast, the 50th episode of this podcast. Like, please subscribe. Thank you for allowing me to just add some value to you all, add value and try to explain things and put many things into context to really truly try to help you guys learn how to trade and invest in the stock market for yourself. Just sit here and think about, okay, what's wrong with Tesla stock? Okay. And are these things temporary? Okay. Should I be starting a position? And am I okay with holding Tesla over a 5-year period at $112 a share? Am I okay with holding Tesla over a 10-year period at $91 a share? Am I even okay with holding it for a 3 to 5-year period at $150 a share? I don't know. But what I will say is that I believe that all the issues that we have outlined tonight, that they're all temporary in the grand scheme of things. And I'm telling you, we just need to pay attention on the long term, especially if we are trying to make an investment, right? You know, I'm talking about we need to pay attention to the long term if we're trying to make an investment, right? Not a gamble, not necessarily trading, depending on how you're trading, but an investment, right? Like, think about it from that particular perspective, that we need to think about this stock from a long-term investment perspective, right? Again, I appreciate you all. Please have a happy new year. I thank you all for tapping in again. We will be back in next week. Remember, please like this, okay? Please like this, and please go back and review everything that I talked about in this episode. Remember, don't pay for it. Trade for it. I'm going to tap in with y'all in 2023. Let's go make some good money and build some wealth